we began January 2026 publishing our deep dive analysis on Ironwood Pharmaceuticals, a new breed of drug manufacturing company. And look at that, the day after our video went live, there was a massive gap up with a long push down to end the day. That coincided with a price target upgrade. Some analysts suggesting that the price target should be all the way up at $8, which would still be around twice what the price currently is right now. But looking at this around mid-February, the last month has had a little bit of volatility. Now, luckily, we have avoided escaping what is a decent upwards channel as suggested here by Finviz. But the way this price scrapes the bottom of the channel in multiple locations tells me that this is by no means an easy market to be involved in. While to me, it seems pretty clear that the re-rating is real, there is a markup happening all the way since the November earnings report, which we talked about in our deep dive video. But the volume just is not here at any point in this movement yet, which tells me that this is cowboy country. There are not really institutional players getting involved. The only volume spike happening right at the beginning of the year means that most likely that volume was an artificial increase that had more to do with options expiring rather than anything structural. However, at the end of the day, some people don't care how a price goes up. They just care that it goes up, and Ironwood is doing that. A bumpy ride, but a ride that is clearly on the way up. Second, we have the stock that we discussed in the December update. Gulfport Energy, near the end of November, looked like to us, we thought this was a clear breakout. But in reality and clearly, the breakout did fail and price has gone all the way down to the bottom of what is now a pretty fat, chunky range. Not a good sign at all. In fact, the 20 simple moving average is currently below the 50 simple moving average. And even on this chart, you can see that as recently as last fall, last late summer, the 20 simple moving average is not afraid to go below the 200 even. Any decreases or movements down to the 170 level or around aren't necessarily likely, but they should not come as a surprise to anyone involved in this market. Gulfport Energy is looking like a cautionary tale of why we need to always manage risk. If you go back and look at that December deep dive, previous technical updates, you can see that from this October to December period, it had every single marker indicating that this was about to break out. Its reaction to the early November earnings report was picture perfect. It was respecting moving averages, and then yet sometimes it just doesn't happen. This is essentially the story. In December, natural gas was up here. Within a month, it had nearly halved. Again, always manage your risk. Always be prepared for something unexpected like this to happen. And if you're still considering investing in Gulfport Energy, a wonderfully run company, the lowest cost per barrel of natural gas, keep in mind that natural gas here is experiencing volatility on a scale that has never happened in modern markets before. If we had had a crystal ball, you probably would not have seen us publishing the deep dive right when we did. But the way things have worked out, it's just incredible that all of this has been happening in just a couple of weeks since.
This video is intended for educational purposes. Opinions made by me or the Sage Seeds AI are not investment advice.
And now, it has been 14 weeks since we published our deep dive on Grupo Cibest, what turned out to be our second deep dive of the year. I'm about to peel back every single trade that we did, both buying and selling, journaling and walking you guys through our thought process throughout. At its peak, it represented more than 100% of our liquidation value. That is right, we were more than all in borrowing money on our bet. That sounds crazy. Well, believe me, we don't do that often. It is a little crazy, and you're going to see exactly how we got there right now. It all began way back on May 15th, 2025. This is this tiny red little trigger bar, low volume, thinly traded, price at its sort of equilibrium. At the time, the 20 SMA was below the 50 SMA, but it had just surprisingly tilted up. And with a few days earlier having a very nice earnings report, which we absolutely do have in multiple of our deep dives since back then, we felt that it was prudent to start a position at a price of around $42. That position at the time was quite small, smaller than our usual positions only because of how crazy things had been during the first quarter of 2025. A lot of volatility preceding our initial investment had us a little bit more cautious than normal. And really not much happened. Throughout the summer months, we largely just let this run and ignored it until the week of August 11th. Right here, you could see the price eventually began to ran up. We did not know that was about to happen, but we did know that a few days earlier on August 7th, we had had this very high volume day after yet another absolutely astounding earnings report. Now, for those of you that have been following along, you know that around August 2025, we were making a quite large bet in another company called Rolls-Royce Holdings, a company that we have absolutely loved on this channel and this portfolio. Large amounts of our capital were already tied up and dedicated on another bet, which largely explained why throughout the whole summer we had left this basically untouched. But this high volume gave us strong conviction that this stock needed to be a higher priority. And so we began increasing our size on August 12th, 13th, 14th, 15th, and then more on the 19th, and then ultimately a very large purchase at the time on the 27th. Meaning that by the end of August, we had almost tripled the size of our initially small position. Our feeler position had suddenly become a proper position in our top 5. However, compared to the end of August, we were about to really start ramping up our purchasing. A run-up right at the beginning of September further illustrated to us that this upwards trend was real, that there was genuine demand. Look to the deep dive videos for more information, but we had been watching how Grupo Cibest bonds were trading in the Singaporean exchanges. The first time this stock or any major South American bank stock had ever listed bond offerings in an Asian market. And the thinking was simple. Institutional investors in Asia were absolutely clamoring to get their hands on these securities. And so on September 9th, right here during the run-up, but then also more on September 11th, we once again increased our position. This time, we increased it by 50% compared to what it was at the end of August. The growth was accelerating for sure. And then September became very quiet, almost eerily so. Despite the stock really never threatening even the 20 SMA, the actual experience of holding on to this during September was quite nerve-wracking, especially in conjunction with the Rolls-Royce bet. We had a massive bet and now a second pretty large bet going on at the same time. We successfully avoided needing therapy just in time for us to make another sizable purchase right here on this thin day, September 23rd. That is when things really began to take off. By the end of October, we had seen another run-up with very healthy metrics across the board. The pullback came in looking picture perfect. So on October 24th, a very light day, we actually nearly doubled the position again. Officially, right here, October 24th, this became our largest position in the portfolio. We had sold Rolls-Royce a couple weeks earlier and now had the dry powder needed in order to become as aggressive as we wanted, and oh boy, did the opportunity present itself for us to be very aggressive indeed. Right before the next earnings report, which was going to be on November 5th, we saw an opportunity on November 4th to make what was at the time the largest single purchase of this stock that we had made throughout this entire experience so far, getting close to doubling a third time. Again, this was already the largest position in our portfolio, and we were doubling it. After the earnings report, a beautiful, wonderful reaction gave us enough room to, near the top of this reaction, make several large purchases on November 11th, November 13th. We then watched this come back, fully prepared to trim, if not full on sell what we had accumulated so far. But what the stock gave us instead was a very classic consolidation pattern. We actually took advantage to buy more shares around the 20 SMA on December 1st and December 2nd. At that point, the consolidation grew. It's not always the case, but in this situation, we were actually very aware that we were in the midst of a consolidation base. And so excitement was at an all-time high. The stock had been performing well for well over 6 months at this point. What had required patience from us was now requiring self-control at massive levels, not to get too excited, not to pull the trigger too early, and most importantly, not to forget that nothing is ever 100% certain. This rally could have ended at any point. And especially around the holidays, leading into the holidays, around the holidays, the volume very much decreased. It was on December 29th that we made yet again another purchase. This now was breaking the record for our largest single purchase. At this point, we had near 100, if not more than 100% of our portfolio in this one stock. And the consolidation did end up leading to another markup period. A beautiful markup from around $63 all the way to about $85 at its peak. How do you think we handled this? Well, we made selective small purchases throughout this entire rally, more nibbles than anything before. The bulk of our buying was in the rearview mirror for us at this point, but there were additional nibbles on January 6th, January 7th, January 12th, January 13th, January 15th, January 22nd, and right here near the peak, we did in fact buy on the 27th and the 28th, which we now know have been the peak so far. These two were the only purchases we made that ended up being not profitable. Because that's right, we no longer hold our position in Grupo Cibest. We would have been content to hold this forever as long as the stock continues to go up. But as soon as February began, right there on February 4th, we had a very uncharacteristic red bar, high volume, a complete push down, a snap down to the moving average. This was something unlike anything that we had been seeing in this stock throughout the whole journey. And February 4th, an extremely stressful day because this was our winner, guys. This was by far our winner. A very, very massive profit for us. And yet, still above all three moving averages, this bar cannot be something that we ignore. Despite the acclaim, despite the success that we were feeling on this, despite the relationship that we felt with the security, even when we try not to, we made the conclusion that we had to close out the position, not a partial sale, but a complete closure of the position on that day. And market wasn't quite nice to us that day. Admittedly, maybe we didn't handle it the absolute best, but we did a pretty good job. We tend to know what we're doing when we're offloading shares. Yet the vast bulk of our shares did sell for as low as $79.51. That would be right around here where my cursor is, and about 10% lower than the recent high, which, I won't lie, does sting a little to this day. It especially stings because it's not always that we completely close out a position when its technicals still look as strong as this. Snapping back to the current day, we are beginning a coil here. Who knows what's going to happen with this, but we are definitely still watching Grupo Cibest like a hawk. Who knows if this specific security will continue to make appearances on the channel, but it is one of the securities that we have most talked about, the one with the most deep dive videos available, and truly just a gem in the emerging market space. Let me know in the comments, would you have done things the same or different? Have you been having your own holding journey in parallel over this last year? Most of our trades are not held for as long as this one. But as long as a business is sound, we like the economics, and the price continues to rise, our favorite holding period would be forever. Drop your thoughts below. Don't forget to like and subscribe so that this channel can reach a wider audience. And if you like this level of transparency, don't be afraid to open up with other audience members, with myself. We do hope these videos can motivate us to come to the deep dive videos that we post on the first of every month, with some motivation to work together as a tribe. There's no such thing as a perfect investment. Markets are too messy and risky for that. We always have to do the best we can with imperfect information. And so anyone who puts their neck out there deserves a certain level of respect. Thank you for watching, and see ya, Sage Seeds.